Welcome back. Still down close to about 1% on the benchmark indices. The mid-caps are underperforming a cut of close to about 1.5%. The stock which is on our radar right now is Onmobile Global. Let's pull up the intraday chart of Onmobile Global. There has been a big fall that you can see in the stock. It's down close to about 16.5%. It's been a rough year for the company. It's lost about 40% of its value so far in 2018. To discuss the company's fundamentals in greater detail, we're now joined by the CFO of the company, Mr. Ganesh Murthy. Mr. Murthy, season's greetings to you. First, if you could tell us, is there any particular reason why the stock is down 17%? Were there any pledged shares which have been released in the market? Are you aware of any supply side pressure or any impending negative announcement?
No, there has been no pledge of shares, and there has been no impending announcement. This is a variation which we saw over the last couple of days. The stock went up pretty rapidly on Monday, and it has now come down because there was a significant purchase of more than 1 million shares on Monday.
Right, Mr. Murthy, we understand that near-term volatility in the stock price is okay, but if you take a look at from the start of this year itself, we have seen a decline in the price of your share, and that's primarily because, you know, the street is concerned with where does growth come from. We see your core business is the ringtones business, and the contribution of that has come down. Where does your next leg of growth come from? Your margins also have halved from last year.
Yeah, our growth essentially is going to be coming from two areas, videos and editorials and games. Let me talk a bit about the games segment. We have been growing games. Currently, games is about 60 crores of our revenues, so about 10% of our overall revenues. And we are seeing significant traction in the games area. And this is actually growing. The games revenue is growing by about 10% quarter on quarter. So that's a huge growth area that we see for the future. And incidentally, we also acquired a games company which has a games product, which is one of the best games products in the world. And this will help us to fuel our growth in this area.
Okay, so now in FY18, you had revenues of about 635 crore, much lower than 720 a year ago. What is your expectation of what the full year numbers could look like, and even on margins?
And we don't provide forward guidance. So I would say we are looking at roughly stable figures, stable revenue figures. So the growth in the games and videos, which I mentioned, as part of our strategy, is yet materialized. It'll take a couple of quarters before we see a huge amount of growth in those two areas. In the meanwhile, we are trying to stabilize our ringback phones business, and we plan to sort of bring it to an even keel during the next 2 quarters.
Okay, what do you mean by even keel? What kind of margins does that business do at an even keel? And you said you will not provide, forward-looking guidance as far as your numbers are concerned, but some color on revenue mix, how does that pan out? Because the contribution from tones has been coming down, and like you said, the other businesses are growing faster.
Yes, the contribution of tones has been going down primarily. The reason is because of the telecom sector in India, which has seen reduced ARPUs. And if you take out the India segment of the ringback tones, we are actually growing in the ringback tones in other countries and other parts of the world.
Okay.
We aim to stabilize ringback tones revenue in India in the next 2 quarters. And that is what I meant even keel.
Okay. So it will stop declining, according to you, by the end of FY19?
That is correct.
Okay. All right. That's good to know because that is clear. About 40% of your overall revenue. So, at least flat revenues there will be positive. Mr. Murthy, the company's market share right now as we speak is at about 367 crore versus the cash on the books, which is about 350 crore. Your cash is at an all-time high. Your market share is pretty much at an all-time low. A lot of investors in the past have also asked you why you're not doing a buyback. The last buyback that the company did was in 2017 when the stock price was, I think, at 114 rupees per share. And now, as we can see, the stock price is down to 35. Do you have buyback plans this year?
Buyback is a serious option that is being considered by the board. We have done buybacks in the past. Over the last 6 years, we have done 3 buybacks. So buyback is not a not unusual for us. And definitely is one of the demands that we hear from our investors. So buyback is definitely one of the options for our cash strategy.
Is one of the options on for your cash strategy. So let's talk about the cash itself on the books. You said you did make an acquisition. What exactly is the total cash on your books right now, and where is it invested? How much of it is in India? How much of it is abroad?
Okay, we closed quarter two at about 350 crores of cash. And after that, we paid a dividend, and there was this acquisition which absorbed something like about 40 crores.
Okay.
And so we should be roughly having something like about 270, 280 crores of cash in our books. Out of that, something like about 80% of that would be in India.
Okay. Mr. Murthy, you've always indicated for FY19 your priority has been OPEX rationalization, where you've said you want to close dormant legal entities, exit high-cost offices, bring America back to profitability, manpower optimization through automation. What percentage of your OPEX rationalization has the company already achieved so far this year? How much is left? And by the end of it, what, according to you, would be the ideal OPEX ratio as a percentage of your revenues or the target margins that the company is looking at?
Okay, we had a significant amount of OPEX rationalization during the last quarter. For instance, we closed down our office in Paris, and we've expected to save something like about 2 million euros per year from this rationalization. We have also initiated the process of closing down some of our non-revenue generating legal entities across the world. The impact of this is actually likely to be felt in quarter three and mainly in quarter four and onwards. Another thing that we have done is, as I mentioned, a lot of automation has been implemented. Our headcount has reduced from something like about 950 people at the end of Q4 last year to about 850 people. So 100 people reduction in headcount, which is the impact of which again will be felt in Q3 and Q4.
All right, Mr. Murthy, thanks a lot for joining in. The street will definitely watch out for what you do with the cash going forward. Most importantly, whether that buyback comes by or not, the stock is under pressure as we speak. With that, we slip into a short break, come back, we talk about individual stocks and the markets as a whole.